Hello everyone, welcome back to another market analysis video. In this video I'm going to share a few stocks for intraday trading and also give levels for Nifty. So let's get started. This is the 15 minutes time frame of Nifty and I'll just draw a level over here. Okay, as you can see, the Nifty broke down this level, took a pullback, it again came down, took a pullback again, and it's showing a bearish sign again. So what can be done is, okay, we can also see a trend line over here, right? So once the stock sustains below this level, a short entry can be taken, and I'll just draw the levels. These are the levels for Nifty, and for long, if it sustains above this level, a long entry can be taken, and this can be considered as the target. Moving on to the next one, we have Tata Consumer. As you can see, the stock has formed a double top pattern, and it is on a horizontal support. So once the stock breaks down this level, a short entry can be taken for target. This looks like the next price action level. Okay, this target is big enough for intraday, so this is going to be a short target. Just in case the stocks takes a support from here and goes up, a long entry can be taken above this level, and this can be considered as the long target. Moving on to the next one, we have Lupin. Okay, Lupin also, I see that it is on a level, right? Yes, and we also have a trend line over here. So a short entry can be taken once the stock sustains below this level, and you can consider this as the first target and this as the final target. Okay, moving on to the next one, we have JSW Steel. JSW Steel, as you can see, it has been consolidating. Okay, so a short entry can be taken once it breaks out of the box. If it breaks from above, or long trade can be taken, and a pivot can be considered as a target. If it breaks below, a short entry can be taken, and this can be considered as the first target. This the second, and this the final. I'll just check how big the target is. So 1.5% target is enough for intraday. These two can be considered as the crucial levels. Okay, if you can hold it further, very good. Moving on to the next one, we have IOC. IOC, as you can see, already the levels are marked. A short entry can be taken once it sustains below this level, and this can be the first short target, and this can be the second short target. Just in case the stock takes support from here and breaks this, a long entry can be taken, and you can just simply consider this as the long target and this as the second long target. Moving on to the next one, we have BPCL. BPCL, I'll only suggest BPCL for a short trade here. Okay, so once the stock comes here and breaks down this level, a short entry can be taken, and this level can be considered as the first target. 1.5% is enough. Okay, this can be considered as the first target, and this as the final target. Moving on to the next one, we have Axis Bank. Okay, so can you see that Axis Bank is at a horizontal support, and if we just zoom in, we can also see a flag and a pole pattern, right? It's an inverted flag and pole pattern. So what we can do is we can look for a short trade over here. Once the stock breaks down this level, a short trade can be taken, and this level can be considered as the target. 1.3% is enough for a target. If the stock comes down, takes a support and goes up again, a long entry can be taken after it sustains above this level, and you can simply consider this level as your long target. Moving on to the last one, we have HDFC Bank. HDFC Bank, Yeah, okay. HDFC Bank has formed HDFC Bank has formed a inverted head and shoulder pattern. Because you can see this is the shoulder, the head and another shoulder. A long entry can be taken once it sustains above this level, and you can just simply consider this as the long target. I'll just check how big this is. 0.9%, very good. I'll just check for another level. Okay. So these two can be the long targets for HDFC Bank. Okay. So this is it for the video, guys. As you can see, I have given you 7 stocks and levels for Nifty also. I hope you liked it, and I'll see you in the next video.